Is set to report results on Wednesday. To prepare for the release, we've updated our earnings model to be calibrated in line with consensus estimates among analysts. And if you're new to our earnings modeling approach, the format is pretty similar with Tesla compared to some of the other companies that we cover. Anywhere that you see a blue cell within the file, those represent our estimates. Purple cells represent company guidance, and orange cells represent consensus estimates among analysts. We start with an income statement that we model forward on a non-GAAP basis. The income statement is built from our segment details down below. So we have information for Model S vehicles, Model X, Model 3, Tesla Power, or Tesla Energy products, and then we have some general income statement ratios. So you can expand each of these to see. Right now, the majority of the revenue and profit is being derived based on Model S, and also the service and other revenue. But in the later years, we start to ramp Model X, and in I believe it's 2017, 2018, we start to ramp Model 3. Right now, we've included some PowerPack and Powerwall revenue in the fourth quarter of 2015. But as we get additional details, possibly on this release, we'll change these estimates. We also model a full balance sheet and cash flow statement. If you're using a discounted cash flow approach, you'll need those details. Let's see this here. Otherwise, you can just leave it collapsed so it doesn't distract you from your analysis. And the details of our discounted cash flow valuation approach are there as well. If you want some additional information on how we calculate this, we have a 10-minute video that describes our discounted cash flow approach on our website at www.gutenbergequityresearch.com or on our YouTube channel. Okay, so now for this quarter. The company has already released the number of deliveries, so they've already told us that they're going to deliver, or that they actually delivered 11,507 vehicles for the second quarter. So there's really no mystery there. They also gave guidance on the last in the last shareholder letter with regards to profitability. So if you scroll down to the Outlook section, we've highlighted some of the key items. You can see here we expect non-GAAP automotive gross margin, excluding the zero-emission vehicle credits, to be just under 25%. So we have it in our model at exactly 25%. They also gave us information on the regulatory credits. So they say 15 million in total credits, with 5 million of that being the zero-emission vehicle credits. So that what we have here. They gave us a CapEx number, which you'll find down in our cash flow statement. 1.5 billion for the year. And they gave some information on operating expense, which is essentially how we've calibrated our sales and development costs. So when we do that out, we find that the consensus estimates for revenue, operating income, and ultimately EPS, based on almost 0% effective tax rate for the year, comes out in line with management's guidance. So the big question will be, will they update their number of delivery vehicles for the full year, their guidance for the full year? So right now it's at 55,000 vehicles. Given that they beat their guidance on deliveries for the second quarter, there's probably a pretty good probability that that 55,000 will get increased, but it's really going to come down to the production of the Model X vehicles and how quickly they can ramp that. So that's essentially where we stand heading into this release. Be sure to check back after the call when we'll update the model for the new second quarter results and whatever additional guidance they provide. And if you'd like to download this model, please visit our website at www.gutenbergequityresearch.com. Thanks for watching.